Hey, what is up everyone? This is Evan Carthy from evancarthy.com. Today we are going to do the S&P 500 E-mini futures. We're going to do the review from last week and then the preview for this upcoming week starting tomorrow, September 22nd, 2019. So let's look at the charts. So looking at the December contract, I believe the September is expired on Friday, and so you're actually seeing a pretty big up here in the upper right hand corner. This right here is the September contract, and then this right here is the December contract. So it's interesting to see quite a disparity between the price of it right here, 28.50 to 30.13.50 for that, because then late Friday, the S&P 500 E-mini futures December contract, it sold off pretty heavily down there. The trade wars to China were to blame, but as I mentioned in previous videos, pretty much all big moves are in the market are hidden behind news, because they need a reason for the big banks and institutions for them to make the market moves. They need some excuse, so they're always using something. And right now, the only really major storyline after the Iran attacks on the Saudi Aramco oil fields is now it's the continuing trade wars between US and China. So they're using that excuse late on Friday to sell off the market. So basically just a bunch of people want to unload their positions going out to the weekend, and so that's the excuse they use. Oh well, it doesn't matter. Let's look at the charts and see what we can anticipate coming up next week. So using the December contracts, I'm not going to look at the September one anymore. Using the December contract right here on the 5-minute chart. So what we're looking at right here, this is a potential 8.236 long setup here on the 5-minute chart. That pivot high, that pivot low, come back, hit the 78.6 Fibonacci retracement level, so locks it in. So we're good to go. So this is a potential setup. It isn't live yet. You can see when the market sold off, it came down here, stopped pretty much right at the negative 4.236 Fibonacci extension level, found some support, and then sold off again. So what we're waiting on right down here is for price, if it eventually does, which it probably will, come back down and hit the negative 7.236, which is at 29.6650. That would initiate the trade, and then exit would be just below this yellow line up here. I need to make that easier to see, but it's at 29.86, so just a little below it, say 29.85. Make sure you can get out of it right there. But if price continues to move down, doesn't hit that exit level, and goes all the way down here to this green line, move this over some. Hold on, that's not it. Rats, where'd it go? Okay, well, I lost it. Hold on a second. Let me zoom out a little bit. All right, if it comes all the way down here, just switch out 15-minute chart, as you see. All the way down, all the way down here to the negative 21.236 at 28.75. Then that'd be the next time you get in, and then the exit would move down here just below your original entry at the negative 7.236 at 29.6650. So quite a big gap for it right there for that. But it is pretty interesting that this setup, it lines up perfectly if price continues to move all the way down here, because if price hits the negative 7.236 and comes up and retraces and hits that, then moves over, don't think about getting in down here because it moves over. This setup's done, time to look for something else. But if it doesn't go up and hit that, but it goes down here and hits the negative 1.236 at 20.75, then we do move the exit down there and it's still live. And it lines up with another exit that we currently have, which is extremely interesting how this works out. You see this other 8.236 trade short that is currently going on right now. I'll go over here in just a second. The entry for that one lines up pretty much perfectly with the exit of that one. So that is pretty interesting to see that I want to show. But this one, so that's that one over there. I'm going to delete this Fibonacci level right there so it's easier to see. And then for this one right here, here is the 8.236 on, again, you see this. I've found this one before, people really started switching over and trading this heavily for it. But yeah, so this trade right here then is an 8.236 trade. You can see it got in here at the negative 2.36 at 29.05. Exit is currently down here at the yellow line at around 28.75-ish, so a little bit north of there. If I was in, I'm not in this right now, not in any contracts for the E-mini S&P 500 futures. but the exit for this one's going to be just a little bit north there, so say about 28.7650, 20.77, just be safe to get out of there. But if price comes up and does hit the 30.44 up here, then the exit's you're going to move the exit up here just north of 29.05, so make it about 29.07. Make sure you can get out of there. It hasn't yet, so that's why the current exit is still down here. You can see over here the trend line that was going up, going up with it right there. You can see how it adjusted here a little bit better. Going on that trend line, broke out, never came back up and tested, never came back up and used the former support as resistance, and now it's just kind of making a box right now. I'll show you the highs and lows of it right about there and there. So it's just currently in this channel right here, deciding what it's going to do. My prediction is I'm definitely looking for it going lower based upon this setup that we talked about, originating from right there. For that long setup they're waiting on, and then currently this short setup that it's currently in. I know last week I said I was looking for definitely more weakness in the market last week, and basically what we got last week, you see this channel that it created right here. It looks like, let's see, when did last week start? On the 9th. So starting on the 9th, the 9th right there. So market went up some and ended up almost close to where it started. So market's pretty flat for the week. So looks like a lot of consolidation going on. People getting in and out of positions, which way they want to hedge. Again, my prediction, I think the market's going to go down. We're going to have some retracements before, if the market continues to go higher, I think we're going to definitely see some more movement down. Let's see, yeah, there's nothing else in this one. So this is the continuous contract right here. This one's pretty cool because it just, takes each contract and puts it together. It can't trade off of that, obviously, because you have to trade off the contracts that it's on for the month. So again, trading off the December contract now, but this is pretty cool. So you can see a real long-term picture of it. So I'll say we'll start up in the upper right-hand corner up here and work our way back down to the longer time frames. So in this one up here right now, this was actually a 76.4 long setup that got completed let's see, the 19th. Yeah, earlier in this week that I just want to point out as well. Using that one, that pivot high, pivot low, trace back up here to 78.6. Then we just bring the Fibonacci retracement down. See price move back up. Never came up and hit the 2.618. If it did, you'd move the exit down here to 30.1150. But since it just hit the 100% 30.1150, the exit was here at 3,007.25. See, price came out. I drew a little trend line off of there just because I'd like to see what happens when the trend line breaks, if it uses it as the former support as resistance. Kind of did. See, it broke out, kind of went back a little bit, and it came back and took it out at the 78.6 to complete that trade setup to the short side down there. I'll go ahead and take this off right now. So I went in all of this kind of garbage up in here, and I was looking for some other setups. There is kind of like that 78.6 which is very similar to this one right over here. You can see it's pretty similar setups, continuous contract to the December contract that was just at a second ago. Sorry about that, I got tongue-tied right there. So we're just waiting for further movement down, and then I'm going to zoom out a little bit more because we are in a couple other short-term trade setups as well. Here is actually a 76.4% short. I believe that's on either the 15 or 5-minute chart down over there. Yeah, it's either on the 15 or 5-minute down, but you can see that's where it originated from. Price went up. You know what? I think this one may be done because I changed the 76.4. Hold on one second. Let me change my template right here. 78.6. Nope, still, let's see there, going up, never hit, going up, nope, still valid. Okay, cool. So this one is still valid. You can see it definitely took off. Then when price continued to move up, you see it had the trend line break right there, went to the side a little bit more, got its second win, has continued to go higher right there. I'll show you another trend line break right here. Right there, broke out, went back down, and now it's looking like it has created its top right around this kind of levelish right over there. You got that top right down there. and then it looks like it's creating, oops, its channel. There we go. Support and resistance level all around this area, right in this area right here. So this is another reason why I'm definitely looking for the market to come back down again. Is this one is way overextended for it right here. So the exit we're looking for right here, 29.35, the bottom of this blue box right here is going to be the exit from this move right here. So it'll be interesting to see what happens when the week starts right here, if it is going to continue to move lower or if it's going to use this as support again and bounce back up in this channel between about 29.86 and 30.22. But again, my bias is here to the downside. So I think eventually when this box does break that it created, I think it's definitely going to go back to the downside. It's just, when is that going to happen? That's what I don't know. Is it going to use this as support, or is it going to go back up and use it as resistance again? You can see right there. Show you this here real quick. This trend line break right here, broke out of it, came up, used that former support as resistance, sold off back down there. So that kind of pattern happens over and over and over again. So it's just a good thing to be aware of when you're looking at the direction of the trend and what you think is going to happen with the market. And then moving out to the daily time frame, because this is the big one right here. Here we have, let me take this off so we can see that better. Here we have 76.4% short. Take all this stuff off so we can see up there. Here we have the 76.4% short, actually 78.6. I went and changed that last week after some more meditation. I just felt that was a more accurate number for it. So we have the 78.6% short right here. You see price come up, hit the 78.6, then we retrace down, hit the 50, came up, hit the 100% up here, came close, 27.29, but definitely not even close enough to, that's 27.1475 to get us out. Never hit it, and then just kept on moving up, and now is kind of making, 1, 2, looks like it's making, a triple top for this up here. So if it does break up higher, then yeah, it definitely has plenty of room to run up there, because this is record high territory up here. And as you can see, there's definitely selling going on when price gets up here. I mean, look at these daily candles up here. As soon as it starts hitting those areas, look at that, pushing it down, pushing it down, pushing it down. Then you got some people trying to push it up down over here. So it'll be interesting to see if what the market wants to do, if they want to take a break and push this back down, because the exit we currently have for this level is down here at the bottom of this teal box, 27.1475. Right now it's at 29.8950. And then another thing I want to show you regarding the trend line is, look at what's happening right there. Look at that. So what have, the one thing I like to look at, mentioned a couple times, you had that support, came down, broke out, and then look at this resistance, going back up, push it higher again, resistance. So that is another big reason why here, this is the daily chart right here, that I really think the market is going to work its way back down, because this is the setup, that is very, 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 very interesting, that I like seeing, is that once you get that break and then it starts using the support as resistance, then my money is on the market moving back down. It's just a setup I see over and over and over again. So that's why I'm looking for eventually the weakness to come through in the market. When was this? This is back in August when that happened, and that's last December, back over there, for price to come back down and hit, at least come this low to take this out around 27.1475. Not sure if it's going to happen next week or not. Again, I don't know the timing of it, but just based upon this 76 or 78.6 short that is in, I need to change these from it to 78.6. 78.6 short that is in, plus this trend line break, and now using the former support as resistance. I'm looking for a sell-off to happen and coming down at least to 27.1475. Definitely could go lower for sure, but based upon this setup, 78.6 over here, that is the current target for the longer term time frame for the E-mini S&P 500 futures that we were looking for. So my bias right now is definitely in the short and intermediate and even long term, since this daily chart is to the downside. Is the big huge crash happening right now? I don't think so. Won't know until after it happens. I mean, looking at this weekly chart, I mean, eventually there's going to be a big pullback happening. Because I mean, look at it, since 2009, it's pretty much been going straight up. If you use this trend line right here, that looks pretty good right there. We're still well inside of this trend right here. So until this trend line breaks right here, I mean, there's no reason to believe that, a huge crash is coming. And I'll tell you what, I'm gonna take this off of there right there, take that arrow off right there. All right, so and until this happens, until this trend line breaks, I mean, there's no reason to believe that that the crash is imminent and is going to happen. Now, could this be the top up here? Oh yeah, for sure. That definitely could be the top and price wobbles around. But again, the one thing to look for is after the trend line breaks, like say that's going to be the break. I'm not saying it's going to happen right here, just an example. Say it breaks right here. I'll even highlight it. Say this is the break right here. Price breaks out and goes down. Then just like the example above, we look for price to come back and retrace back up. Use that trend line as that former support as resistance, and then that's when we're going to think of price to sell off, and that's when definitely the sell off to happen. So until this trend line breaks, it's still extremely strong trend that's been going strong since about February, March of 2009. I mean, we can just look at, let's say that, and look, drawing these trend lines is not a science. You just try to guess at the best support areas, and the only thing about trend lines is they're best to see after the fact. That's the one reason why I don't really trade off of them like that. And then look at that one broke out, came back up, now it's using that as resistance on that side right there for it. But it's just something you see over and over again. You see, so even when you get like the initial break right here, you usually can wait until price pulls back in that minimum. If you are looking to get short, like see how it broke right here. If you had tried to chase it and got in right there, well, then you're at a horrible price and price comes back up. You're like, oh man, I just faked myself out, now price is going back up. So when there's a trend line break, whether it's short or long, wait at least until price comes back up to where it broke out of. Because look at that, it broke out, came back up, and then sold off again. Didn't come up and use it as resistance perfectly, but came back out to the original breakout point. So that's just one thing to think about. Now, can price break out and just go straight down or straight up depending which way it breaks? Oh yeah, of course. There's gonna be some that you miss if you wait, but I like to try to play it as safe as I can, and at minimum for something like that, I would wait until at least the original breakout point for price to come back up to it. So anyway, so these are just simple lines to draw. Again, they are subjective. It's not, I don't trade off them specifically. It's just good to know which way the market is trending and how it works. So anyways, so that's what we're looking for. I guess really this is the weekly chart right here for the S&P 500 E-mini futures. So I mean, right now in the long term, I guess I take it back from what I said earlier. I'm still bullish on it until this line right here, this blue line, on this weekly goes and breaks. No reason to be bearish on the market, but definitely for the short to intermediate tenure, looking for these short subs that we went over earlier to come back here and get filled. But as you can see, there's still plenty of room within the trend here for that to happen, for it to consolidate some. That's healthy for things to consolidate. You can't keep going just straight up forever for that. So it's healthy for it to consolidate, and then when it gets closer to this line, to see what's going to happen. That's when we can see some real fireworks and see, that maybe if you want to get back into market, position yourself to get back in, there could be a lot of support coming in for that. But I mean, right now, if price just stays around, say in this level and stuff like that, you're not looking at something until, say, May of 21, November of 21. So pretty much it's going to be mid to late 21, and even depending on if the market continues to go up, I mean, it may even not reach it then. So probably the earliest we'd see this trend line come back and being hit, if it really sells off, would be like April of 20, something like that. So still have plenty of time for this trend line over here on the weekly. But anyways, video's running long. Hope this helped. This is the weekly review / preview for the week of September 22nd, 2019 for the S&P 500 E-mini futures from Evan Carthy over at evancarthy.com. Have a great week. Talk to you soon. Bye.